Welcome to Fisher Webinars. The following is a recording of Consolidation in Global Pulp and Paper, originally presented on Thursday, January 29, 2015.
And today's topic is consolidation in the global pulp and paper industry. And we're going to try to use our consolidation analysis in order to predict a little bit more accurately about what's coming. So the first thing that we need to do is establish a common sense of understanding about what we mean by consolidation. And really, consolidation is a phenomenon that happens in the industry, in any industry, and it's just a matter of time. And it is a measure of the merger and acquisition activity in any business, which happens when organic growth really is exhausted and the owners of the company still demand growth. So all industries are always in some phase of market consolidation, and generally the older the market, the more mature the market, the slower the market is growing, and the more merger and acquisition activity we can find. So let's see if that fits in with our understanding of the pulp and paper business. Now, we have some very bright authors that published an article in the December 2002 edition of the Harvard Business Review, and they constructed what they'll call the Consolidation Curve. And it's kind of instructive to look at this and to sort of understand what this is. Along the vertical axis is a measure of industry consolidation. In this particular case, they used a Kearney analysis that talks about the top 3 market shareholders. And over here on this axis, it's the same measure, but it's a logarithmic scale of HHI, or the Hirschman-Herfindahl index, which is used predominantly for analyzing micromarkets and looking at consolidation. So we look at that, and we look at it versus time, and we can see industries that are located in each stage, and then we divide the curve up into 4 stages: the opening, scale, focus, and balance and alliance stage. It's interesting to note that here is pulp and paper industry in what the authors would deem to be stage 2. And that's kind of a curious thing. We think of the pulp and paper industry as being very mature and would therefore expect it to be up in the balance and alliance stage, or in a 4th stage of consolidation. But in fact, we want to take a look a bit closer, a little bit more closely at the industry characteristics, or the company characteristics in each stage of the market. In stage 1, where we've got an emerging market, its market's growing very, very rapidly, we see the winners to be, that is, the eventual winners, are investing in technologies. And these would be described by very high growth rate markets. If we look, for instance, at an industry like corporate wellness or something like that, where there's lots and lots of companies that are entering the market space as it's developing, as that need is being defined. Stage 2, it continues to be a high growth phase, and high growth is a relative term. It could be in some markets that 5% growth is very high. In some markets, 3% growth is good. In some markets, 10% market. So it's not the absolute percentage growth, but it's actually a relative growth. And the technology winners start to emerge there. Those that have invested in stage 1 start to become the winners that we see and notice in stage 2. And those winners to be are investing in scale and increasing their footprint. They're building more facilities, essentially. In stage 3, the market starts to slow a bit, and we see very little technology change. There's no more breakthroughs, but rather corporate growth now starts to come through merger and acquisition activity. So the winners to be are really acquiring the smaller companies. The mergers are happening between larger companies. And then in stage 4, where the market's really stopped growing altogether, or has maybe even negative growth, contraction, we'll see that the cost reduction is really the driver behind any M&A activity, and this is when mega mergers happen, really big deals. And the typical concentration ranges that you see there are, again, measured in terms of the top 3 market share holders. So we'll take a look at the pulp and paper industry using these measures of scale. It's interesting to question, is the industry really consolidated? The industry is very old, is very mature, and yet we don't see the consolidation happening on a global scale. It's really not not definable by any scale on the consolidation curve, and that's because the industry really isn't global. It really is a segmented market based on region and grade. So we'll take a look at that. So this is a graph of ownership by grade for every production facility in the world. And what we're doing is we're using data extracted from the Fisher Solve tool, which is a relative database that we use in order to do our analyses. It has every mill that makes over 50 tons a day in the database. And so you can see here, using that information and plotting the ownership versus the grade, there really is no overall owner. There are some large players, but there's no owner of the majority market share. Clearly, the consolidated industry is not in stage 2, or the entire industry is not in stage 2 consolidation. So what about if we go down to the segments? Or can we learn anything more if we peel it away and look at segments? And the segments that we're going to use in order to illustrate consolidation is containerboard, coated papers, uncoated freesheet, tissue, and bleached hardwood pulp. And we're going to look at the 4 grades of paper by region, but we're going to look at the market pulp globally because it truly is a global commodity. And the regions we're going to consider are North America, Europe, and Asia Pacific. We certainly don't want to leave Latin America out. It's a very important and strategic area for the production of pulp and paper, but it is very diversified because of geographical boundaries, the distribution of the facilities around the cone of Latin America. We're going to use Brazil as a proxy region and look at the grades in that region. So let's look at North American capacity. This is a chart of production over time for the grades that we're considering, and you can see containerboard relatively flat, and our printing and writing grades, that is the coated papers and the uncoated freesheet, are both in a declining phase, and tissue is, well, you can't see it here because the tonnage is so small in comparison, but the tissue is growing at about the rate of the population. So it's a healthy market, but we'll see what's happening in that market as we look at it more closely. So in containerboard, we look at market share distribution for containerboard, and we can see that the top 3 shareholders have 63% share, and according to our chart earlier, that puts it in stage 3 consolidation. And we might agree with that. It's a fairly slow growth, a flat market. There's very little breakthrough technology in that market, so corporate growth requires merger and acquisition activity, as witnessed by the combination of companies that we have seen over the years. And that's really driven by cost reduction. You can see here this is a cost curve of production of containerboard in North America, and you can see that's a very, very narrow band between the first quartile and the fourth quartile producers. So if fourth quartile producers want to reduce their operating cost, that is in an effort to drive their cost position down and increase their sustainability in the market. Here's an illustration of what's happened with the consolidation in North American containerboard, and what this is plotted of individual company ownership over time. And we can see here where Weyerhaeuser sold off its brown paper capacity to IP back in 2007, and where Temple Inland was acquired by IP back in 2011. And it therefore now owns a large share of the market. Same with Smurfit Stone and Rock 10. So we can see that there's been some activity in the North American containerboard market, and it continues to be M&A activity, and we would predict that that would be the case going forward because of the flat market conditions and the continuing requirement by the stakeholders for additional profits. Coated papers, very much the same way. I mean, the Verso new page was in the news, has been in the news over the last year. When that deal was finally culminated, they ended up with Verso ended up with 39% share. So that means the top 3 shareholders now account for 73% of the total market, putting it in stage 4 consolidation. Clearly, the market is in negative growth patterns now, and that requires more M&A activity. So we would expect to see more consolidation of these smaller segments as the market continues to contract. For North American uncoated freesheet, very similar situation, 67% share between the top 3 shareholders. We would expect to see continued consolidation of that capacity as companies continue to extract profits from a non-growth market. Tissue and towel is interesting. Tissue and towel actually has a slow growth. It's growing at the rate of the population growth in the region, so it is a healthy market. When we look at what stage of consolidation it's in, and the top 3 producers account for about 60% of the share, leaving some room for additional consolidation. And certainly we've seen that as the small single mill producers pop up. They get venture capital to put in a tissue machine, and then that machine or that mill is acquired by one of the larger players along the way. If we peel back the onion a little bit more and look at away from home and at home grade segments, we see that the away from home is actually at stage 4 consolidation, with 71% of the share owned by the top 3 producers, which in that case is Georgia-Pacific, SCA, and Kimberly-Clark. The at-home segment's a little bit more distributed at 64%, but still in high degree of consolidation, with the top 3 owners being Georgia-Pacific, Procter & Gamble, and Kimberly-Clark. So the finer we can define our market space, the more we can learn about the accuracy of predicting additional M&A activity. North America overall illustrates what a low-growth region would look like. North America, if we had to summarize, would be in stage 3 consolidation, where cost reduction is implemented by an M&A strategy by the board directors. Large share of the top 3 players in all 3 grades, and then the stage of consolidation where we are also is indicated by spin-off businesses. This is illustrated when IP spun off their distribution Expedex. They merged it with Unisource, and the new company is formed to become Veritiv. And the distribution market is relatively unconsolidated. Therefore, we can get profits from organic growth in an unconsolidated market. So I would expect that distribution business to grow and additional M&A activity to happen there as consolidation happens in that sector. The examples that we used for the consolidation containerboard and coated papers was well documented. And we recently got in the news the announcement that Rock-Ten is merging with Midwest-Vaco, and this is, of course, in the solid fiber containerboard packaging business, a grade region, or a grade that we have not considered in this analysis, but is a separate consideration. Turn our attention to Asia-Pacific, where all the business has certainly been focused in the recent years. You can see the rapid rise of containerboard capacity. A very, very steep curve, growing at 10% aggregate over the years we're considering here. Very, very rapid growth. We look at uncoated freesheet, even is on this upward slope, although much, much flatter. Coated papers has been built out a little bit, but is considered predominantly flat. And tissue and towel is growing at a very, very rapid pace in comparison. Certainly we're growing with not necessarily the population, but now with an increasing number of users. So these are very interesting markets to look at in and of themselves. Containerboard in Asia Pacific, the top 3 shareholders have about 23%, which would put them at the emerging market stage. That is, certainly stage 1 consolidation, where there's, not so much rapid technology change, but in comparison, rapid technology change. If we're going to look at the most modern paper machines, we're going to have to go to Asia Pacific to find them, because this is where the installations are happening. So as the market emerges and more users adopt paper versus either non-use or cloth use, then we're seeing an increase certainly in containerboard and plants being built out. Coated paper business, this is in stage 3 consolidation. So we've gone all the way up the curve now to where this is a slow growth market. The top 3 shareholders account for 45%. It still is a very little technology change happening there, as we would expect continued merger and acquisition activity to be more intense. We might see some initial activity there. We haven't seen much yet, but certainly it could be coming in the near future. Uncoated Freesheet, stage 2 consolidation, where still we're building out facilities and to try to meet the market, not necessarily a high growth market again by comparison to containerboard, but with the top 3 shareholders only accounting for 18% of the share, we can expect to see some M&A activity happening there as that market slows down. For tissue and towel, again, 31% accounted for by the top 3 shareholders, puts it in stage 2. Considered a high growth market. Again, the tonnage is relatively low compared to containerboard or printing and writing grades, but the number of mills, the number of machines is increasing. So if we look at the number of machines being built out, certainly we're starting to see the winners invest in more plants, building up more machines. Turning our attention to Europe. Europe is flat to declining with coated papers, very little growth, of course, in tissue and towel. That's sort of the same sort of population indicated curve there, but printing and writing grades are certainly suffering, where containerboard is starting to grow, and this is predominantly accounted for by perhaps machine conversions, going from printing and writing grades to containerboards, and getting those machine conversions going probably accounts for the increase in production capacity here. But if you look at the degree of consolidation, it's quite low, which is an anomaly because the European business is, of course, mature, and yet it's unconsolidated. And that could be because of respect for the geopolitical boundaries, respect for businesses wanting to do business within their own sub-regions. So we could look further at divisions of European business in either Northern Europe or Southern Europe. We know there are distinctions between those two, but this certainly sets the stage with the fast-growing market, or at least a higher growth market, for a little bit less M&A activity than you might otherwise expect to find for a mature business. European coated paper certainly demonstrates that consolidation is possible in Europe. They've overcome the boundary constrictions and seen 54% of the share of this market is between the top 3 producers, which puts it at a stage 3 consolidation. So with a slower market, a declining market, we will see some increased M&A activity that's demonstrated here. Uncoated Freesheet, very similar, with the top 3 producers holding 39% of the share. That puts it also at stage 3 consolidation with a slower declining market, and further M&A activity could be expected, or actually is expected. Tissue and towel, also at stage 3 consolidation, although there's a third of the market which is held by producers that make up less than 1% of the overall market capacity. So lots and lots of little small producers and just a few large producers. Certainly SCA increased their share dramatically when they purchased Procter & Gamble's European assets some years ago. That gives them a little over 25% capacity, not yet at that magic threshold of 30%, which gives them market leadership responsibilities. But the higher degree of consolidation certainly does add to the stability of the tissue and towel market. So as it continues to grow, we might expect to see a little bit lower M&A activity than you might otherwise expect. So with bleached hardwood kraft pulp, a global commodity, and here we take a look at the different regions, and you can see that Latin America accounts for the steepest growth rate in production, and with Asia Pacific's growth being certainly positive, Europe being declining to slightly flat, and North America also declining to sort of leveling out here. Difficult to really say, draw any conclusions from this in terms of the degree of consolidation. And if we look at the market shares of all the producers on a global basis, we can see that if we had to call it, we might say, okay, we agree with the authors of the article that it is in stage 2 consolidation. That is, the top 3 shareholders account for about a third of the market, but with the size and the distribution of the producers, we don't really expect to see much movement at all in a global commodity such as kraft pulp. Taking a look at Latin America and using our Brazilian friends as a proxy, we look at the containerboard business there, and we would say, yes, it really is a growing market. They're continuing to produce containerboard at a high level, but predominantly or domestic consumption. And the top 3 producers are already fairly consolidated. We've got Clevene at 21%, and the top 3 shareholders at 36%. We would say that that is again a stage 2 consolidation where as the market, the local market there continues, if it continues to grow, we would not expect to see a lot of M&A activity, but rather more plants would be built in order to meet that demand. If, however, the demand starts to level out, then we might see some additional M&A activity within the country. So what's the future? How can we use these analyses to really construct a clearer picture of what we think is going to happen and where the high activities might be in terms of mergers and acquisitions? We constructed a bubble chart here, and this is plotting the growth against the degree of consolidation, or the degree of concentration. The bubble size indicates the production capacity of the market. So here you can see that the dynamics of the market might be graphed out by expecting Asia-Pacific containerboard, as the growth starts to slow, would also start to migrate up the concentration curve. That is, we would get increased merger and acquisition activity. European uncoated freesheet is already at a fairly slow to negative growth rate, so we would expect an increasing pressure for M&A activity. North American coated grades, North American containerboard, North American uncoated freesheet, all these are already fairly highly concentrated, and we would expect continued pressure to go further towards the higher degree of concentration. Bleached hardwood kraft pulp, as a global business, we don't expect much movement there. The growth is continuing to be there. We don't expect it to move laterally up or down the growth curve. Therefore, we don't expect much concentration to happen at all. Asia-Pacific tissue and towel is still at a very high growth. Again, the tonnage is low, but the growth is high because of adoption of new users, and so that market will continue to grow. We don't expect a lot of movement downward yet, but eventually everything will start to migrate towards a higher degree of consolidation, as we saw in the author's curves. So in summary, have we reached the limits of consolidation? In market pulp, no. We don't expect that to be any more consolidated. We expect that production capacity to continue to be distributed amongst a number of corporate owners as that market continues to grow and the demand is met. So in North America, in packaging and printing and writing, we're bumping up against that 90% ownership value, where the Department of Justice becomes very interested in any additional M&A activity. We saw that exhibited when the capacity was, the mills had to be sold off in order for the Department of Justice to approve recent acquisitions. Certainly the Verso New Page merger required the sell-off of some capacity. The Temple Inland acquisition by IP required the sale of, I think it was 3 mills. So the Department of Justice will continue to be interested in any further activity there. So we might be bumping up the limit, up against the limits there. In Europe, very mature markets and still unconsolidated in some segments. And so we would expect that there will be some activity in Europe, certainly a continued activity in printing and writing grades, coated and uncoated freesheet, and packaging will likely be next. Southern Europe maybe might indicate some additional M&A activity, and then followed by maybe Northern Europe. And in Asia, printing and writing and packaging will be the first grades to start seeing consolidation as those markets start to slow. We've seen actually a first merger was announced earlier in the week. So packaging is maybe already starting to slow down to the point where it will drive companies to merge, or the large winners to be will be acquiring the smaller producers. In Latin America, local markets are already consolidated. They're fairly small size, and they're fairly isolated from one another in terms of, they can't really be considered as a region, as a trading region, so they're already consolidated due to their fairly small size.